And good morning. It's Mary Ellen McGonigal, and you're with the MEM Edge show. And this is the show where we bring you stocks that are on the move. And we are also, of course, going to pay attention to groups, sectors that are on the move. There is certainly a lot of transitioning that seems to be going on in the markets here. And so let's go ahead and get started. I'll provide you with a bit of information as to what we are going to be covering here today. And the first item is, of course, we are going to go ahead and review the current markets. Let's just take a quick look and get a feel for exactly where we are as it relates to the bigger picture. And then from there, we can go ahead and take an overview, take a look at where the strength is following last week's earnings. And as many of you may know, last week was a super busy week in the world of earnings reporting. And we certainly had a lot in the way of surprises, not only with earnings that came out, but also with investors' responses to those earnings. A lot of well-known bellwether stocks that came out last week. So we will take a look at where the dust has settled, if you will, following last week's action. And then lastly, I'm going to go through a number of stocks that look attractive going into earnings this week. And it's going to be another busy week. The calendar is rather full as far as companies that are due to report. Not quite as many in the way of marquee names, but certainly enough. So there are ways that we can take a look at the earnings calendar. I've come up with some stocks that look compelling and interesting, and we'll review why they look attractive going into earnings. And as many of you know, trading stocks going into earnings is not for the faint of heart. It does not come highly recommended, but there are those that are interested, so we can go ahead and look at some of these names. And in particular, certainly this earnings season is unrolling and unraveling as one that is not what I would say normal, because certainly we've seen a number of stocks that have come in with very exceptional earnings, and the markets are not rewarding them. So we can, we'll go ahead and get into some of those, but let's go ahead and get started. I did want to talk about the bigger picture and the broader markets. And the first index I have here is a daily chart of the NASDAQ composite. And the main reason I'm pulling up the NASDAQ is because this is an index that going into the beginning of last week was very much the clear-cut leader. This is where a number of the leadership stocks were, leadership sectors underneath. And as many of you know, the NASDAQ is very heavily technology weighted. And so a lot in the way of technology subgroups were really just putting in tremendous numbers. We'll get into some of those subgroupings as well. But what we did see happen last week was a bit of a fall down, if you will. So let's just take a look. This is a daily price chart. And I wanted to first point out to you this divergence, if you will. So what we're looking at is the beginning of the year, the NASDAQ going into February. Of course, it did fall in line with the rest of the markets. The NASDAQ was the first of the broader major indexes to really recover going into March before suffering again at the hands of the broader market. But you can see that we have a higher high here, but we weren't getting the confirmation from the MACD. That's what I'm presenting here below. That's the moving average convergence divergence, a momentum indicator. But ideally, when an index or a stock hits a new high, you want to get that confirmation with the MACD. So indeed, we did not get that back in this March period. The index did in fact fall quite a bit subsequent to that. And taking a look at where we are now, in the late June period, the NASDAQ hit a new high in price. Wonderful. It again was presenting itself as the leadership index. It faltered a bit in here because some of the underlying groupings software in particular, some of the internet names fell out of favor. This has a lot to do with the China trade wars, the inability for potential Chinese investors to invest in technology companies hit this NASDAQ index a bit. But then we did go on to hit yet another new high in July. But however, if we take a look down here at that MACD, we do have that same divergence where the MACD is not confirming that new high. So it's just setting up a bit of a weak scenario and a backdrop. So as of now, this was printed as of the close Friday. We can see the index was doing fairly well, but it was Friday's action that really told the story. The NASDAQ was down almost 1.5%, significant volume, and a number of the subgroupings within technology within the NASDAQ were hit quite a bit harder. So that was a bit unnerving. At this point, I believe we are still just above that 50-day simple moving average. And from my work, a break below that would be negative. It would potentially indicate a shift in certainly the uptrend for this index, but just did want to start there with that broader view because the NASDAQ has been the clear-cut leader year to date, and we are seeing distribution and a bit of a fall down there. So we will look closely at that if a break occurs on that 50 and assess things from there. Now, let's go ahead and take a look. This is a weekly price chart of Align Technologies, and I did begin last week's show with this, and I'll tell you why again. What I've done with this weekly price chart going back to the beginning of 2017, I do have these arrows, and these arrows are pointing out to you the week that ALGN, Align Technologies, reported their earnings. And the point here is for those of you that have an understanding that earnings are important, my goal here is to present to you really just how important earnings are, because you can see that upon the release, this is a stock that we actually picked up back in here when it released these earnings and broke out of this base. The stock advanced. Another strong earnings report, the stock advances. Strong earnings, advances. So I think you can get the picture here. This, of course, is the beginning of this year with the correction in the broader markets, but yet another strong earnings here in Q1 of this year. The stock advances further. But what I did want to do is take it one step further. The company did come out with earnings last week, and the earnings were exceptional. They beat a top and bottom line. Going forward, the company was very, very optimistic. They're expanding into Europe. This particular company has products to teeth straightening, and it's being very, very widely received. But take a look at what occurred subsequent to the release of their earnings, and that is, as of today, the stock is down 8% despite these phenomenal and exceptional earnings. And unfortunately, this is in line with what we are seeing in other high growth stocks that are coming in with earnings. The earnings are quite substantial and doing really well, yet the markets are not rewarding them. They are being sold off. So I wanted to point out that phenomenon. It will come more to light as we move on a bit further. And then within that, I talked about some of the sub-industry groupings within technology that had been really strong. This is an ETF. It's called HACK, H-A-C-K, and it is cybersecurity stocks, which, as you can see, throughout this year has been very much in an uptrend. This is that fall in line with other tech stocks with the China trade war fears. But you can see the significant drop here over the last 2 days. This is a daily price chart. So these cyber security software stocks selling off a bit. And then also, well, we can take a look at another subgrouping that is within there as we move forward. So let's go ahead and take a look at a snapshot where we are in the current markets, and then we'll dig into these stocks setups for the week. This is taking a look at 12 different sectors, industries, groupings, and so forth. And it's called Candle Glance. You can access this directly from the initial interface page on StockCharts. It's a wonderful way to really get your arms around where the markets are, where the strength is. What I've done is overlaid an RSI indicator on top of these charts. So you can go down here and select those that you wish to have displayed. And then by sorting that by RSI, which is a relative strength indicator, I can quickly, as can you, assess where we are in the markets and which subgroupings, broader indexes, and so forth are exhibiting strength. And what we can see here is quite clearly the industrials, that XLI is the ticker symbol for this ETF, is presented in the first as number one, as currently exhibiting the most in the way of strengths. And that's in line with what I'm seeing as far as the underlying stocks within industrials, that this was a group that really suffered at the hands of trade war tensions. As those tensions have subsided, you can see that it has been able to regain above these key simple moving averages. There is a 20 and a 50-day. So as this continues to advance above, it is now poised to breakout. We can just take a quick look at a bigger display here, but it is still forming the right side here. But you can see RSI is positive, as is MACD. So the industrials continue to outpace other areas. And this is followed by the financials. And this is another sector, XLF, that had been showing quite a bit of weakness prior to the last 2 weeks. It all started with earnings from some of the major banks coming in really quite strong, and then regional banks reporting strong earnings. And then also we're in an environment where interest rates are ticking up, all beneficial to the financials. So these are your two most powerful, followed by consumer staple. And consumer staple stocks do tend to have a bit of a more defensive feel to them, but there are other pockets of strength within consumer staples. And then, of course, we can see that the consumer staples just last week turned positive. There was a period 3+ weeks ago where we were picking up on the strength within consumer staples as it started to progress. But however, this 200-day was in a downtrend, presenting a possible obstacle. However, last week it did break above that. So that's quite constructive for the consumer staples group. We will look at a stock in that grouping that looks compelling. So as we move down, you can see, if you've been following this over the last several weeks with us, or perhaps you do this on your own, you can see that there's been a distinct shift where prior weeks, the NASDAQ was very clearly up in the forefront, as were technology stocks. And then consumer cyclicals seem to have hit the pause button. This is another area that was super strong, certainly the February into June, and then the beginning of July. It does seem to be faltering a bit here. So as we drill down, you're getting into the current snapshot, areas of weakness. And then certainly we cannot ignore the move into energy. Energy stocks have been really super volatile. Let's take a look here. You can see this bouncing around, and all of that has to do with the price of oil. Energy stocks do tend to trade in tandem, and oil prices have been high, but quite a bit bouncy as headline news drives that. But they are certainly exhibiting strength here, certainly relative to its peers. So this is, again, a great way. One last item here. For those of you, I know people will tend to forget to keep an eye out on the VIX, and that's the volatility index. It's an indication of the expected volatility going out over the next 60 days. And right now it's hovering at the 14 level. We're not in any danger, if you will. But if you do see that VIX get up into the 20 area, that's where you need to really pay attention. but I did put it on this week because the VIX jumped 7% on Friday. So there's a bit of a fear that volatility may pick up given the shift that we're seeing in the markets in response to some of these earnings reports that are coming out. So let's go ahead. I mentioned to you that we can certainly go ahead and take a look at some of these stocks that are due to report this week. And what I'm going to do is present you with the names of these stocks and tell you why they caught my eye as being interesting setups going into earnings. There are certain signals that in the past certainly have worked as far as alerting you to the fact that a stock may well come in ahead of estimates. This is a very small company. The first one we're looking at here is HABT. Oh my, okay. Should have presented this first because it's now up 11, almost 12%. Okay, and they have not reported yet. They're due to report tomorrow. So this stock, I will tell you, is extended. It's not going to be quite as compelling to me going into earnings, but let me just give a little bit of a backdrop as to what drew my attention to this. This particular company, first of all, the fact that it was breaking out of a sound base ahead of earnings, and this pickup here in the price was on improved volume, quite a bit of volume coming in. It's not clear to see here. The MACD down below is a momentum indicator, had trended positively, and your RSI is quite positive. And there were a couple of other reasons. Habit Burgers just recently extended their menu. They are now including breakfast, but they are also continuing to open new locations. They're on tap to open 50 new locations in the near future. And most importantly, from my work, analysts raised the estimates for this company for 2019. They're expected the growth and all of the impact of the expanded menu to really pick up into 2019. So the stock did look compelling. Let's move along and take a look at another stock that is due to report August 2nd. This stock is Pacira Pharmaceuticals, PCRX. They're about a $2 billion company, and they have, among other products, in the pipeline, they have a pain medication that is highly anticipated. But a couple of things that drew my eye to this. One is within healthcare. For those of you that follow the market super closely, you may have noticed that a lot of pharmaceutical stocks have been moving to the forefront, and there's good reason for that. There's a lot of new drugs that are passing through their clinical trials a bit faster. Trump has removed some of the red tape needed, so these companies are able to get their new potential products to market quicker. And so this particular company, last Thursday, a highly regarded research firm revised their price target for the stock up to $48. It's trading at $41 right now. And so that would be an improvement of close to 30%. But more importantly, as a company is close to presenting their earnings, if you see analysts raising estimates going into earnings, generally that is a very good sign. These are analysts that have a little more insight. Perhaps they're meeting with management. So that was what caught my eye here. And then also we do have this RSI trending positively, as well as that MACD. So we can keep moving on here and take a look at some of the other companies that are due to report. This is another one. And actually they are due to report today, and it is PGT Innovations. This is a smaller company. They manufacture windows and doors, but take a look here. You can see last week the company gapped up after they announced a strategic purchase of another company that manufactures windows and doors. It's supposedly a very, very vibrant area within the construction industry. So the company that they purchased is also a manufacturer of windows and doors, but they also, it was a purchase that picked up analyst interest, and they raised estimates for this stock. So another positive going into earnings where analysts raise estimates. And then I also wanted to point out to you that historically, this stock does have a history of doing well. This is another quarterly earnings report. The stock gapped up. This is their previous earnings report. So you like to see companies where they have a history of coming in ahead of estimates. Now, we can certainly drill down and take a look at another stock. This is PBF Energy, and they are going to be reporting August 2nd. Now, what I wanted to point out to you within this energy stocks, we talked about those picking up, but there really have been select groups within energy. It's not just the big E&P Chevrons of the world. The refiners have really, this is an oil and gas refiner. It's a $5 billion company. So a couple of dynamics are going on here that caught my eye. And one is analysts did raise estimates. So we do like to see that. They're calling for earnings this year to be 143% greater than last year. That is a very, very healthy number. And the other phenomenon that I wanted to point out to you is a number of refiners did report last week, and you like to see precedent. This is Phillips 66 PSX. You can see this, the company gapped up in response to earnings and is still trading higher. One other refiner that reported last week is Valero, and you can see the stock also gapped up on their earnings. So and you like to see that precedent within a given group. You can understand that there may be dynamics that are causing these refiners to pick up. And I will tell you, it has everything to do with the U.S. oil production. It continues to hit new record highs. There's going to be a need to refine this oil. So this has been a vibrant area. One other refiner that is reporting this week is HollyFrontier HFC. Now, this stock does not look quite as dynamic, but it does have the positive RSI MACD. It has broken back above key simple moving averages, certainly making it worth paying attention to. So let's go ahead and move on. There is another area that I'd like to draw your attention to. So we talked about financial stocks. We can take a quick look here at the sector group graph. You can see it's been coming on. There are two areas, two subgroupings within the financial space that are really having the most impact on this uptrend here, and they are banks. We talked about some of these bigger banks coming in with great numbers, and then also life insurance companies. And there's a very sound reason for life insurance companies to be picking up and having renewed interest, and that has everything to do with interest rates. Gradually rising interest rates are very favorable for life insurance companies. And the reason is because a number of their assets, as they collect policy premiums, are put to work in fixed income. So higher yields are better for them. So with that in mind, let's take a look at a life insurance company that is going to be reporting tomorrow. It's LNC, Lincoln National. It's a $14 billion life insurance company. An analyst in this one did raise estimates going into earnings. Now, I will tell you, this is not a stock that would normally capture my attention or my eye, simply because the growth estimates are single digit, 9%. But I did just want to point it out to you whether and we also have possible resistance here at this downward trending 200-day simple moving average, but it is a turnaround candidate. Not my favorite, but felt compelled to point that out to you. Let's look at some other insurance-related stocks that are due to report this week. This is Voya Financial, VOYA. and they're going to be reporting tomorrow as well. This company is also an asset management company as well as insurance sales. And the analysts are raising estimates on this stock as well. And then one last in this insurance space that is reporting this week. Again, you can see where these insurance stocks got hit with the financial sector falling out of favor as interest rates were not in a rising mode. This is ING, and this is a company based out of the Netherlands and another life insurance company that could potentially be turning. Again, the last few that we've shown are not true to my style. I like higher growth stocks closer to new highs, but these are certainly worth pointing out. I wanted to show you a stock last week in the life insurance space, TMK, that did report, and the stock gapped up and is continuing to trade higher. And one last area that I wanted to point us toward before we run out of time here is a stock that is related to, as many of you may know, unemployment is at a 17-year low. And we can take a look at a stock that is poised to benefit from that. And this is Kforce Staffing, KFRC. This particular stock, I might have the, let's see if I can get this. Yeah, that's the correct ticker. And so this particular company, again, it's a $1 billion staffing company, and they're due to report tomorrow. Analysts are currently revising the estimates up for this stock going into earnings. And the stock is also trading really constructively. From my work, I like to see stocks that are breaking out of bases. This stock did break out of a base last week. Take a look at that volume, super constructive. Your MACD, your RSI are trending positively. So the company prior to earnings, if I didn't mention it, they're reporting tomorrow. But it's all in line with this low unemployment, the need for staff. This particular company specializes in technology as far as staffing, and then also within finance and accounting, two very robust areas of the marketplace as far as the need. And then it is another company that historically has come out with earnings that are positively received. So that is also an item that is worth noting, that the company has a history. And so they are right now on track, KFRC, to report record earnings for the company. So what we can do here is take a look at other stocks. I like to see, well, what else is going on? This is Assign, another staffing company that reported last week. It gapped up tremendously. Another staffing company. And of course, this is a much smaller one. They also are in the tech space. Huge gap up on strong earnings. They have already reported, but it's with an eye toward pointing you toward activity elsewhere. So I will go ahead and leave it at that. I don't want to go over my time, but again, we are in a period of caution. For those of you that are in tech stocks, you're going to want to pay attention to their action around their key 50-day simple moving averages. While the longer term trends are very much in place, these are strong. A lot of these are strong companies with strong earnings. They do seem to be in a little bit of trouble here recently since last week. And this is First Trust Cloud Computing, Sky, which had been very strong. If you had followed, you would see that I had been bullish on software for quite some time, but it is exhibiting signs of distribution. And we have seen it in the past. The group has been able to recover, but it is something to be aware of as you trade. And I am going to go ahead and leave it at that. Please stay tuned. I'm going to be a part of Market Watchers Live both today and tomorrow. So I hope to see you there a little bit later this morning. Happy trading.